same thing going on in the currency as well. We've had a couple of little tests of this 728 area. One on Friday, another one again yesterday. It's held for now, but the bounces are looking a little bit weak on that one. I'm not holding anything, but I still have a couple of bids in 127.5, 127. Sorry, 727.5, 727. I might keep those in and give it another little go against that support. We'll wait and see. I think a lot of this is perhaps the dollar side of things rather than the Chinese side of things at the moment. Over in Japan, we've had a bit of data out. Machine tool orders coming in a nice healthy 9.7%. These are the flash numbers for the new month, year on year. Well, they're for June, so the latest figures. So a nice jump there, 9.7%. We've had quite a bit of chatter out of Japan and the BOJ. They've held this meeting with some of the big banks regarding what to do with reducing bond buying. Now, the rough ballpark is that they're potentially looking at around to reduce monthly buying to around 2 to 3 trillion yen, or keep it around 4 trillion yen. So they're banging around some numbers here. Some of the replies to this survey that the BOJ has run is to eventually reduce bond buying to around 1 to 2 trillion yen per month. Now, some have said that tapering should have a swift pace, or then have a swift pace and then bring it down to a more moderate pace, i.e. do it in several stages. Some saying to reduce this buying perhaps over 2 years. Now, other sources have said that the BOJ showed no specific plan of their own at this meeting. So it's all a bit up in the air. Kay, it's throw blind darts at the dartboard and pick a number, isn't it?
Yeah.
At the moment?
Yeah. Well, for one, if the Bank of Japan consults with market participants, they don't have to produce their own plan. It's a Q&A towards the market participants. Feels like the Japanese mega banks must be a bit short JGBs, because they look at a big reduction of the buying, right, by the Bank of Japan. So they must be thinking that rates should go higher. Yeah. And I don't know whether if they really would reduce by 2 or 3 trillion, and at the end of this month, it would mean something really, because then they will go well below the yearly redemptions, which is well, then a real form of QT, let's say. Although they will still be buying, they don't completely leave the market and to its own, because they can't afford that. The government can't afford it either. But yeah, it will all depend. If they come up at the end of the month saying they reduce it by 1 trillion a month, and it's going to take 2 years to get to their objective of 3, let's say, then the market is probably going to go the other way around and say like, well, yeah, so be it. There's going to be enough of the whales to replace what you are not buying. So
Yeah.
It's interesting because apparently, well, I mean, we only heard back from some of the mega banks. Then I was trying to figure out who was at the meeting, but it was all in Japanese on their website, so I couldn't really figure out if the whales themselves were there as well. I trust some insurers must have been there at that meeting. Otherwise, it wouldn't be useful to only go in there with the banks. They want to know what the investors want to do as well, right? If they are going to fill the gaps or not. Yeah, so for the time being, all up in the air, and we won't know unless UEDA decides to send a few well-placed messages onto the air before the meeting.
Yeah, well, when they've indicated that they're, let's call it QT, could be bigger than many expect. Like, they're not going to go small, I think July we're still on to get some details, but again, it's a bit like QT in a lot of other countries and by other central banks. It's not really market moving. This may have some more context just given the size of the holdings of the Bank of Japan. You know, they're holding or whether they're holding over half their bond market. You know, it's a bit different to some of the others. But yeah, it's going to be who steps into the breach, I think, more than anything else. And on that note, I made Five Magic to put up an interesting piece yesterday in our chat room, in our newsroom, that the GPIF are maybe going to change things around. They're having their first portfolio overhaul in 5 years. They do this every 5 years. And they're sitting on, it's been noted, they're sitting on a lot of dollars. The last times they've changed things around, back in 2014, they raised their ratio for taking foreign assets to 40% from 23%, and then they bumped it up to 50% 4 years ago. There's a lot of talk that they might go the other way. In this piece was from the Wall Street Journal, that they might go the other way and start shifting more into domestic assets, which again, that potentially falls into what we've been talking about, you know, picking up JGBs with higher yields if rates are rising. If this happens, this could be big news, and it could be one of the things that actually gets yen strengthening. If they've got such big cash piles in dollars and they're going to convert it back to yen and stick it in yen assets, then that is potentially a big wave. And this is just one of the big whales of GPIF. If others follow suit, then there could be a bit of a tide turning in this one. Again, it's all a bit sources, bits, and you know, a bit of opinion in there as well. But okay, if this has got any legs, it's not going to obviously happen in 5 minutes, but it could be a big change in the tide, do you think?
Sorry, I was muted. Yeah, you know, that's what we've been talking about since actually Ueda arrived. What are the Japanese whales going to do? So could have like a bit of a double effect. And if they repatriate, let's say, funds from abroad, of course that will have a pretty big impact on the yen at first. That could really be a sign for the yen to strengthen versus various. And we know that they are like mostly involved in the US, obviously, but they also have stuff running in Europe, in Australia, for instance. That could be a big market mover. And then, of course, it's going to be in waves, and then we will have to see if it was the right move. But that will come. That will be a consideration for later, because they have tried stuff like this before, and unfortunately, the reason why they went back outside is that that didn't really work too well. So yeah, but it would be a mover, obviously, especially that. You could see moves in equities abroad. You could see moves in the bond market, because they are the biggest holder of US bonds as well. Yeah, that could be a really big wave of money flowing back into Japan and out of other external assets, right?
Yeah. Now I'll have to reread the story because I've only just thought of it. But the timing of this, they would have had their plans already set for the new fiscal year, wouldn't they? So this review would look to, maybe if they did review and let's say they reduced their ratios from foreign to domestic, that would be coming in next fiscal year, wouldn't it? They wouldn't be doing anything this year.
They can do the half year revision.
Change around.
So the big plans, yes, they are revised only every number of years. But I'm not sure it's still that strict as it was before, because you know they also have given parts of their investments to be run by other asset managers, BlackRock being one of them. But yeah, so they could actually the fastest they would revise stuff is September. This is the start of the second part of the fiscal year. So it could be that as early as September they could move things around. But again, I haven't read the article because it's behind a paywall. But yeah, and I don't know when they will really think about doing this, because they have been saying, them and others have been saying that waiting for JGB yields to come back to a bit higher levels. So if the Bank of Japan changes at the end of July and you see an uptick in the Japanese yields over the course of August, perhaps in September they may start to revise their books a little bit. So yeah, I think as I've been saying, second half of this year we could see stuff starting to move. Not that not that it's doing much right now, but
Yeah.
we are still only at the start of the second half. So yeah, it's going to be an interesting one if they move. Yeah.
Yeah, exactly. It's got me a bit itching to maybe start planning for a bit of short in dollar yen.
Mm,
But again, you know, I like a long-term trade, but you can't sit in that one for a long while. It's just going to cost you money.
yeah.
So it's going to be a timing thing. Maybe end of July, August, or end of August, and then see if it can run into September and see if
Mm.
we get those changes, and also whatever's happening with the Fed and whatnot. But
Yeah, because if mm.
yeah,
Because if even if you look at options, if you would do longer term options, you will have to go very, very deep to find a decent price, because you will be paying the forwards, the swap up front.
yeah,
So
yeah,
that is even not a good thing. If you look at a put like 10 big figures below here, you're still going to pay 5 figures away, for instance. So I've
yeah,
I- I've looked at that, and it's still like very prohibitive for us, at least, to go and just take a punt on where dollar yen could be in the next year. If it has to go below 146 to be even in the money. So that's
yeah,
it's already a 10% move. So yeah, it's still a tough one for us, at least, to trade it, especially right now. We really need to wait and until we got a kind of idea that such a wave may be imminent.
yeah,
Um, because if you are on the other side of it, I mean, let's face it, if you're long dollar yen or long yen crosses, you're getting money, you're getting paid every day, and barring some blips, you've never been in danger, right? So
yeah,
those people, you also need those people to realize that, okay, this is now the end of the yen weakness. Now we are going to go the other way around, which will happen if and when the Japanese whales decide to start to repatriate, because that is going to be a big one, and that is probably going to have people not even force them out, but just people think like, okay, maybe now it's not the time to be short yen anymore, and that's going to be a big unwind as well. I reckon.
yeah. Timing's going to be key for that one, definitely. Right, let's move it on. A bit of news out of Australia that financial stress is apparently through the roof, according to a newspaper piece over there, citing some sources, blaming interest rate hikes are really starting to bite. This story says that the National Debt Helpline in Australia has seen a surge in calls and online chats in recent months related to rents and mortgages. They say some of these figures point to younger Australian women struggling to pay the rent. And financial counsellors have said that 13 Reserve Bank interest rate hikes are hurting households. So signs of stress coming there. I mean, it's not they're not alone. You're seeing the same sort of mortgage stress in a lot of countries that have seen higher rates. The UK is still having to face a bit of that because there's going to be a lot of short-term interest rates, mortgage rates coming to an end and jumping up to higher rates pretty soon. So there's a lot of pressure coming on the RBA for this one as to what they do with rates. They have been a little bit more on the hawkish side of late, but news like that will have them thinking the other side. So likely it keeps them on hold, but they will be worrying about the stresses that are growing from the higher rates. We'll see how that plays out. Right, well, coming over to the UK, and I've been saying since we got that decent UK retail sales report that wouldn't be surprised if it went the other way in June. Well, this BRC retail sales monitor for June showed it going the other way, down 0.5%. This went up last month, and the headline retail sales followed suit. Doesn't mean the consumers suddenly collapsing, but it just means we've got this bit of a pendulum swing between bad data, then it swings to good data, then it swings back to bad data again. So no real trend coming from that. A bit of pendulum swinging, but that's a bit of a heads up potentially for the next retail sales numbers from the UK. The muzzles off the BOE squawkers, as we've been mentioning. BOE's Haskell was the first one out the traps, and not too dovish. He said he would rather hold rates until there is more certainty that underlying inflation pressures have subsided substantially. He says the main message is that the capacity of the labour market to match workers with seems to have deteriorated. And he says with an impaired labour market, interest rates would have to remain higher for longer than would otherwise be the case. He says the MPC is looking closely at labour market conditions and underlying inflationary indicators such as services inflation. He says the labour market continues to be tight and worries it is still impaired, and that recent wage data is consistent with the idea that the underlying unemployment rate has risen. So no signal that he's ready to flip to a rate cut just yet. That's narrowing the people who might actually flip. In the June meeting, the vote was 7-2, and in the minutes, it was quoted that several, whatever you want to call it, were close to flipping to a cut. So we're just trying to work out who those are. We've got Peel and Mann to come tomorrow. Mann's a big hawk, so she's unlikely to change. Peel could be a bit flip-floppy and fence-sitting, so he may be a flipper. Otherwise, it's down to Bailey, Breeden, Green, and the new one, Lombardelli, who's replaced Ben Broadbent. So that's a bit of an outlier member there. We don't really know what way she's going to swing, so that's to be decided. But it looks like Haskell at least is going to stay in the hike or unchanged. Sorry, in the unchanged camp at least. Kay, the window's narrowing through who's the other doves that are going to flip, isn't it?
Yeah, but I've been thinking about it, and we try to always figure out who is going to lean where, but then it reminds me exactly of what you said like a minute ago, saying that several were already thinking about it. So that means that on the next meeting, the some veering to the cut side is not going, or should at least not be a surprise, right? So yeah. We now we need to figure out, and I think you named them, the Lombardelli, the Greens. They are going to perhaps do like tilt the scale to where it's becoming really dovish or not. Because the rest, yeah, we know that they were closing in. I don't know. Do we have like CPI next week, right? I think we have CPI next week in the UK, right? So that's going to be another one that is going to impact sterling, and then yeah, I found Haskell a bit of a strange one, because it did speak about the rebalancing in the jobs market also being underway, but then still wanting to be patient. Felt like he took a leaf out of Powell's book, walking every possible side of the line to then come to the conclusion that that they have to be patient. So yeah, it's a bit of a difficult read. It and yeah, and really, I mean, that's where I am at. I don't know. I still think sterling is relatively okay, but perhaps not as buoyant as it was at the end of last week. Euro sterling is still relatively heavy, but that's probably the euro side of things. Yeah, I mean, don't change anything right now, at least not for me. And wait what Powell will tell us. It's going to be from one little hurdle into the next. It's like a hurdle running around the track, you know. The next hurdle is coming up, and we'll see where we land after that.
Yeah, exactly. And, you know, we're still only arguing about the calendar. Are they going to cut in August? Are they going to cut later? Everyone knows that a cut is coming, and they're pretty desperate, or Bailey's pretty desperate to cut anyway. So it could be a case that when they do cut, we get a confirmation move south in the pound. And if it's still looking pretty strong in the meantime, that dip will probably get bought up. But that's not until August. So plenty of time to go yet. And as I said, 2 BOE members coming tomorrow. Over to the ECB, and ECB's not says there's no reason to cut rates in July, and the next truly open meeting is September. It says he's comfortable with the disinflation progress and the market's rate cut bets. The date when inflation target is met must not slip beyond 2025. ECB's Panchetta says the ECB can gradually reduce rates in line with the actual and expected inflation rate, which will complete the disinflationary process underway, but that the ECB should be ready to respond quickly to any shocks in one direction or another. Little data out yesterday, but we did have the New York Fed inflation expectations or inflation survey. 1 year inflation expectations have fallen to 3.02% from 3.17%. 3 year went up though to 2.9 from 2.8, and 5 year came down to 2.8 from 3% previously. We did get some US consumer data or consumer credit data, which came in at 11.35 billion. Why was it not on there? I think it was. Might have been out on Monday. It
was very high.
Oh, let me get the right
dates. Quite a bit higher than last month.
Yeah, it was higher. Last month was 6.4 billion. So it did come in much higher. Well, there's a range of expectations. Some had it at 10.7, some had it at 8.85 expected. I've looked into the numbers. There's nothing really of note there. There's no looking like there's any stresses on short-term borrowing, credit cards and the like. Well, they do everything on credit cards anyway, but in the short-term borrowing numbers, there's nothing to wave any flags yet. There is higher consumer credit, which shows that people are willing to borrow, even with these higher rates. But we'll have to see whether there's going to be a bite in those. But nothing really to worry about from those numbers just yet. Right, there's a whole host of politics still going on in the world as normal. The German government official says Germany will support better UK-EU cooperation. This is something the new Labour Party wants to do, rewrite Boris's Brexit deal and get closer cooperation with the EU. We'll see how far they get with that one. Fitch said that the UK election brings fiscal continuity and efforts to boost economic growth. Not sure how they come to that conclusion, just purely on being in power for a couple of days. But anyway, the ratings agency are out and about of late. They're also speaking about France, S&P saying that the hung parliament is likely to complicate policy making. A bit of a no shit Sherlock comment there. They said credit ratings would come under pressure if economic growth materially comes below their projections for a protracted period. So they're looking for a longer path. And it is fairly important, these rating agencies, if they change ratings for countries, because that can create some flows out of whatever country's assets, because there are certain funds, investors who will only invest in certain grade sovereign bonds and the like. So if those ratings get cut, they are forced out of those assets. France's PM, Attal, he went off to the palace to see Macron and hand in his resignation. Macron said, no, keep it, you can stay on as PM. So still the ramifications carry on over there. Over in the US, Biden says he's not going anywhere and is confident the average voter still wants him on the Democratic ticket. There was a headline that popped up also just before the Flow show started, saying that House Democrats are having a closed door meeting today at 9 a.m. US time. I don't know if that's something or nothing, but that's what they're doing. And there's still a bit of upset over there to whether Biden's going to stay on or not. China has also said it's going to retaliate against these EU tariffs. So that's against what the EU's put in on electric vehicles. They've increased those tariffs from China. China's going to respond. Germany's still not happy about any of it. But this is something that's going to rumble on and might start to impact growth and things down the line. So just something to keep an eye on there. Kate, anything else for anything else?
Oh, no, mate. I mean, I think you're already had a really good run of not a lot happening.
I dig it up. Even when there's nothing to be dug up, I'll still shove my spade in and have a dig to see what's about. But I was actually surprised. I thought I'd have less than what I did have. But yeah, there's always a headline to dig out from somewhere. Right then, well, let's get stuck into it. The big thing today is PAL, obviously. We do have some Mexican CPI data coming up later today. So if you trade in the MEX, that's something to keep an eye on. But otherwise, it's a pretty quiet day on the data front until we get PAL. Now, he's popping up at 1500, 3 o'clock our time. His actual testimony will probably drop maybe an hour, 2 hours before that. We'll get the text lines from it. So the market will be poring over that as well to see if there's just anything different in there to what we already know, or just him reiterating the current stance of the Fed. And then we descend into the actual testimony where we'll read it out. And those of you in the chat room, as I said, I put that in the in our newsroom yesterday. And then we'll get all the politician bombardment questions. And you mentioned this, Kate. It's going to have a heavy election slant to all this. So I'm not personally looking forward to it, but we'll be glued for the first 8 hours at least, just to see if there's anything coming out. Are you expecting much from him?
Well, yeah. First of all, we are extremely not looking forward to have to listen to 2 hours of those people putting themselves forward. I think the only message really is to figure out whether he's going to go on the stay on the softer side after his Sintra's comment, or crawl back on it. And for the rest, I don't think that he will send any big messages into the world. That is not my expectation, though. I mean, of course, never say never, but it doesn't seem like to me that he's going to give them too much. And so we have him today, we have him tomorrow. Tomorrow should be like really a repeat of what's going to be said today. So to me, is once once we see what he wants to talk about, that speech, those initial lines being released, I think we likely will have already the best part of the message that he wants to send out. And that's it basically. And again, I mean, yeah, especially now in an election year, people firing questions at him is going to be very much directed to their own voters, than and to try and get voters from the other side, than really being interested in what Powell has to say.
Yeah, very much so. Because obviously the FOMC does have a meeting 31st of July, and then it's September. I think the market is slowly circling September as a possible cut date now. So, you know, we may get, depending on what he says, if he says something that we haven't heard or something different, then we may get some trading around between the calendar for July and September. If it's a little bit dovish, the market will probably increase July bets a little bit. If not, it will be how we happen or how things perform for September. So that's what we'll be looking at the calendar. Again, I'm not expecting any big moves from this, just a little bit of jiggling about, but quiet markets. Sometimes the market likes to jump on something just to give itself something to do. So, you know, as quiet as it is, be prepared for some moves either way from Powell a bit later. Ali, you're talking about the rate narrative. Yeah, it's the same as we've been saying all the way through. You know, we're in soft landing mode for US data. The market and some in the market, your zero hedges and the like to make a big deal out of any weakness. You know, end of the world is nigh type stuff when the reality is far different. We've been in that position for months and we remain in that position, and we're going to stay in that position for months unless the data starts nosediving. Everything's looking soft landing, and no one needs to panic about anything. So yeah, my view, at least, I'm sure Kay's pretty much the same, is that it's same old at the moment. If the data doesn't collapse, we're just going to carry on going the way we're going. Right, let's have a look at some prices. Looked at dollar China. Let's start with cable today. Just have a little pokey under 128 not too long ago. We were talking about the levels yesterday. 128.5 was my main level up there, and we got pretty close before coming all the way back to 128 pretty quickly. Really, again, you know, this is 2 days now, and we've been stuck in a 48, 50 pip range. Take your direction from whichever side breaks. You know, if we break through 128, we're going to be heading lower. It doesn't mean we're going all the way down to 127, 126. It just means we're moving out of this short-term range. You know, 27, 70s, 80s, that's probably your next bit of minor support that you're going to hit. Maybe we're going to move down 27.40 depending on the driver. But just take your levels. This is why we watch ranges, and this is why we pick the levels. You know where the ballpark is, where the battleground is. It's 128, it's 128.5. So if you've been long enough here, you don't want to see it below, and you don't want to see it holding below. Otherwise, that will mean we're going to see a bit of a drop back. It's a pretty much range-bound markets for a lot of things. Dollar CAD, you know, my old 136.50, we're holding below, can't quite get up there, but neither can we make any inroads to the south. So this one, again, just not doing an awful lot, 20, 25, 30 pips range. That's it for a couple of days. So again, if you're going to go anywhere, it needs to move somewhere. If it moves below 2025, then we're going to be maybe taking on the big figure once again, and that's the bigger level down here for the loonie. If it gets above 136.50, needs to hold it, then we might get a move up towards 137, maybe even a push up towards those prior highs. So ranges. I'm still a little bit short here, but I think I was looking to add a bit higher. But if we get above 136.50, I might just chop it in and wait to see if we get a move up towards these highs to play the range for that. Aussie Kiwi, another one I'm in. We're just tapping one of my levels at the moment. We had this little dip. It's still looking very strong, the Aussie. And again, you can compare this to some of the other dollar pairs if you like. So Kiwi is not looking as strong as Aussie dollar. A little bit of a pullback up to that 61.50s and down back below the 61.30, 35 and holding and back down. Now we're going to be testing the around here, 61.10, 61, the bigger figure. All doing the same walking, all walking the same paths. So again, if you're trading these, if you're buying longs down here, you need to be taking some profit against these minor levels. Now, you don't have to trade off of these levels. You can do if you want, but for me, these are the sorts of levels where you maybe take some profit if you can that way. They're your sticky points. And I was showing this, well, I'll go back to Aussie Kiwi quickly. This one, I'm still happy to short this one. I'm still in a bit shorts, but I'm holding off adding. I'm looking at shorting all the way to 111, but I'm going to be a bit picky and choosy given the Aussie strength at the moment. Let's take that out a bit wider. So I'm really just playing against these levels up here. But I am understanding that Aussie is strong, but I don't know how strong it can be. We've had these moves up and down over this 108 level, so I'm happy to try and give it a go up here. I'm not going big in any of these trades at the moment. Now, as I said, I wanted to just indicate again, you know, how you use some of these levels. Gold to me really has 6 levels. It's got 24.50, 24, there's 23.65, 23.30, 23, and then, you know, down into these lows, 80, 90 down here. 6 levels. The main levels for me are still 24, 23. And you've got these intermediate levels in the middle where the price does stuff. But for me, these are not levels I would trade off or buy or sell into these levels. What I would do is if I'm trading off 23, I'm going to respect 23.30. If the price goes up, that's where I'm going to take some profit. I'm going to respect 23.65 if we get there to maybe take some profit. And the same for anyone who's shorting up here, respect these levels, these little intermediate levels. You know, that's somewhere you may think about taking some profit off the table. Because if you hit that level and then it bounces, if you're short, then you don't want it going all the way back up because then it might be breaking and then you haven't made any money on the trade. So when you've got these quiet ranging markets and you've got these levels, you've got stronger levels, intermediate levels, inside ranges, whatever you want to call them, use them to take money off the table because it's proven these are where the price becomes a bit sticky. It hangs around, it becomes support, becomes resistance. And all you want to do if you're trying to make money is not get caught up in the stickiness. So if you're shorting from up here, if you're shorted on that high, fine, take a bit of money off the table here. And then if it doesn't break and it busts out and stops you out, at least you've put some in the bank. Otherwise, you can hold the rest of it and then see if you get another move down towards these levels. So a lot of these levels over my chart are not trading levels. They're just watch point levels where I might do something if I'm in a trade. Stocks are continuing to fly. I'll have a quick look at the Nikkei because that's following suit. And given the news that we've been speaking about, it could be something that we need to keep an eye on if we're going to get this switcheroo from people like the big whales like the GPIF. It's made fresh highs, following a lot of other stock markets at the moment. So they're all going the same way. You know, China as well, that's having a little bit of a pickup. It hasn't done much after hitting these highs. We had these big lows, obviously, but, you know, these might be starting to pick up as well. We've had a little bit of a pullback, so these might be kicking off again. But Japan is following the rest. Europe, apart from, well, CAC and others at the moment. But if you look at the US, we're still knocking up, coming up towards this 56 level. Again, there's not really any evidence suggests we've got a top. We've got a little short-term top coming into 88s, 90s, somewhere like that. But we've had all these little short-term tops and they haven't lasted long. So you get a top up here that lasts maybe a couple of days. Then if you're thinking of trying to short up here, that's what you want to look for. You want to look for this sort of price action where you get, you know, a top that forms over a longer period than just 5 minutes. This is just 5 minutes relatively. So keep an eye on that one. Stocks are looking a bit boyish still at the moment. And, you know, probably going to get a reaction on Powell on the back of this as well. Okay, what have you done with your gold? I know you were long some.
I'm long. I was about to show it, but you showed it. So
yeah, well, I'll put it back on, or you can take it over, whichever way, mate.
No, I mean, no, I'm still long. 23, 22.90, holding very well. Had to move up to close to 24. Yeah, we came back on the back of less. The weekend being over, we had those two legs yesterday, but it's still holding 23.50 right now, and that's a good, an already pretty decent indication. I have those levels 23, 15, 35 below, and then the 22, 80, 90. But for as long as it's above, unless Powell tells us something different, it still looks okay because that decent 22.90, 23.20 zone has been holding. So that could become a medium-term position if it continues to hold. Yeah, for the rest, Kiwi still 40, 61, 45, 55 on into the RBNZ, which is supposed to leave everything unchanged, and yeah, 60, 90, I guess, on the downside, and then we'll see what we are up to in case or does one of his now regular moves around, after having been quite hawkish. We never know with him. That's about it right now. So I talk about the euro dollar. I have absolutely no interest there right now. I am still not a big still not a big fan of the euro. Sorry. It's stabilizing. We're trading dollars, but apart from that, I don't think the mess is over yet in France. I still don't particularly like the European, especially German, and so on data. And that's about it. Perhaps one interesting one is on the mix where we trying to get back below 18, which is holding just below right now. That is one to monitor, I guess. Call it 17.95. If that goes, perhaps then we're going to trade a little lower. But I haven't seen anything on the political front yet, whether they are going to push through with any new regulations or so. But that's what it's undergoing the laws of gravity, and that is what you get when there's not too much news and you're still trading an 11% currency. That is what you get. But we do get Mexican CPI, which is coming out in about, it's today, right?
Yeah.
We'll check. Yeah, which comes out in about an hour and 3/4. CPI, PPI, that's probably going to move things around over there as well if we get a move far enough away from the expectations. Well, I mean, again, they're expecting a divergence between the headline and the core. So we'll see what it brings. I guess a lot of people are trying to pick it up around 18, 17.95. So get below some really short termers may be forced out. And Ali, are you long from? Yeah, I'm still long gold, mate. I've been trading it between. I've been accumulating some between 23 and a half. Let some go, add it again, let some go again. I'm always trying to trade my stuff around, so that's nothing new. Yeah, so I'm still holding long until we get below 22.80, 23. The figure I'll probably be completely out. But for as long as it holds, I'm going to continue to trade from the long side.
Yep. Ditesh wants to know about Bitcoin. We don't look at Bitcoin an awful lot on here, just as more an interest than trading wise. you know, we've had all this news from Bitcoin. We had, was it Germany who had a big stack of confiscated coins to sell, and this MT Gox stuff and everything going on. I don't know how to trade this from a risk parameter. I don't know if it follows really follows risk at all. We do see, you know, risk on moments. It can rally. The Republicans, I did see Republicans saying that they're going to be taking on or embracing cryptos in terms of being able to allow people in the US to invest, mine, and that sort of thing. So that might be why we've seen a bit of an uplift over the last few hours. That was a piece out yesterday or late last night that Republicans are going against the Democrats and what they're going to do. They want more controls over Bitcoin trading and mining and whatnot. But Trump is apparently saying that you know, everyone in America should have the same opportunity as everyone else. So that might be a bit supportive for the old coiners. Kate, anything you want to do? Shall I bump it over?
No, I'm good, mate.
Yeah. Okay. Well, I'll just I'll have a quick look at oil then. Marcus is looking at oil. Again, it's another one where, you know, we're a bit off the dollar CAD's definitely off the oil bus at the moment. That correlation in the back seat once again. As we've been saying, this storm it did hit Texas, got downgraded to a tropical storm, which is still pretty obviously bad, but you know, the market seems to be moving past that right now. So the fundamentals going to reassert themselves, and on that basis, I don't see why oil should be shooting higher or keeping these gains. US oil's gone through this 82.50, which has been quite a long-term level up here all on its own. So anywhere down 82s, 81 and a half, 80 and a half, that's probably your bigger level, 80 and a half down here. If it manages to hold there, as you can see, we had a couple of little goes and then before we got the bounce up. So that's really your sort of zone in there between that and the fib. And if it can do that, then it should keep this bullish movement going. But if it doesn't, we come below there, then we're probably going back in the box, mid-70s coming up for that one for oil. Right, on that note, we shall call it a day and keep an eye on Powster later on. Try not to fall asleep an hour into whatever. Usually his first comments can be the most market moving, and it all just goes a bit numb. But let's keep our fingers crossed for some volatility. Have a great day, everybody. Thanks, Kay, as always, and we shall see you all bright and early tomorrow morning.
Thanks, everybody.